Hello everybody and welcome to another video on the financial analysis. And in this video we are going to be looking at a company called Love Hemp. Now Love Hemp is actually owned by World High Life, but you may know it better by the actual brand Love Hemp. So let's have a look at what they do. So here we go. So World High Life is the kind of name of the overall company. Incorporated quite recently, January 2019. It's an investment vehicle to identify investment opportunities and acquisitions in companies specifically taking advantage of the rapidly changing regulatory environment surrounding legal medicinal cannabis. As well as investment opportunities within the hemp and CBD wellness sectors, etc., etc. Focus on making investments or to acquire companies operating within that kind of that space, and to achieve an attractive total return primarily through capital appreciation. So this is kind of an investment vehicle rather than trying to create income in the form of dividends. They are hoping that the investments that they make, the companies they buy, are going to grow and grow and grow and make you very, very wealthy. So they have bought Love Hemp as one of their most significant acquisitions. And what we are going to be doing in this video is taking a look at the financial statements. So this is a request from one of our viewers. So here is Parker45, who asked for microsaic systems. We've already done that, and has also asked for Love Hemp. So here is your video. Now, a couple of things. First of all, don't forget to like, share, and subscribe these videos. If you subscribe to the channel, then you get instant notification when a video that perhaps you have requested comes up. Also, please don't forget that when we look at this financial analysis, this is backward looking. So we're going to be looking at the accounts for the year ended June 2020. So they are significantly out of date. It is a backward-looking analysis. I apologize about that, but it should form part of your overall analysis. So if you are a potential investor, if you're thinking about investing, then this should be part and not all of your research, because don't forget, past performance is not necessarily an indication of what's going to happen in the future. So with those two caveats in place, let's dive in and have a look at their financial statements. So here are the financial statements of World High Life PLC, and they are, as we mentioned, for the year ended June 2020. So a little bit out of date. It's October 2021 when we are actually recording this. So they are out of date. However, they just give us a sense of what's been going on. I'll leave you to read through the details. This is publicly available information. It's relatively easy to get hold of. Just type in World High Life Investors. We are interested in their accounts, and so we're going to whiz down to the income statement. Here is the income statement, and the first thing we notice is, well, for the 30th of June 2019 there was no revenue because they just effectively set the company up, and for the end of 2020, or to the 30th of June 2020, revenue £1.7 million. Okay, so we are in pounds. Here we go. So we're actually in pounds up there. £1.7 million, zero in the previous year. Now, the profit margin, so the gross profit is nearly £1 million, operating at about a 50% gross margin. So that's a pretty good gross margin to me. You'll notice, though, that they have a lot at the moment of overheads. Well, we kind of expect that if it's a new business. So £2 million in selling, general and administrative, and quite a lot in this consulting. The other thing to notice is share-based compensation. So those two amounts do not include money which is being paid to the staff in the form of shares, which they are hoping is going to make them a significant amount of wealth, effectively. Always good to have the staff working in cohesion with the shareholders. So not a problem with that share-based compensation, but again, just to be aware of that. So really the overall expenses of running this business, about 5.8 million on a gross profit of £1 million. So they're going to be making a big old loss, the operating loss of 4.8 million. And then you'll notice that there's this big impairment of goodwill. Now, goodwill arises on acquisition of a business. And so the impairment is when you significantly write down that acquisition. And we can see exactly what that relates to by having a look at note 9. Given the size of the business, the size of the number, I'd suggest that that's probably what we want to do. So here is note 9, and note 9 talks about the acquisition of Love Hemp. So obviously we're looking at the kind of the holding company here. They bought Love Hemp 100% on the 18th of October 2019 for about 9 to 10 million pounds. And note 9 gives some more information as to what that actually, how that was actually afforded, and how they came up with the money, etc., 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 and what they actually got in return. And effectively said that the net assets were small negative number, which basically meant there were nothing. So it was all goodwill. All of that acquisition was goodwill. And then they go on to say that as a result of the coronavirus and the pandemic, they therefore then felt they had to write down the value of that goodwill, i.e. they kind of bought something, decided it really wasn't worth as much as they paid for it, and so they take a very big hit of about £7.5 million. So the story is that write down, that loss. Well, they're operating at a loss for 4.8 million, but that impairment is a one-off. You didn't see it last year, you're not going to see it next year, and it's really just an accounting adjustment. They've bought the business, they've already got a Love Hemp, and they've got to try and actually start generating a profit from it. So there is the income statement. Nothing else really to kind of notice, apart from the fact that you'll notice that they do have some interest that they're paying, and if they're paying interest, it means they're going to have some debt sitting on the balance sheet. So let's go and have a look at the balance sheet and see what is going on there. So here is the balance sheet. Up at the top we see the non-current assets. So this includes the existing kind of the goodwill that wasn't written off, that is still sitting on the balance sheet relating to Love Hemp. That's obviously an intangible. It's not something you can see or touch. It's just an accounting adjustment. And they've got some right of use assets and property, plant and equipment. We also see that they got some cash, less cash than they had at the beginning of the year, because they'd have spent a significant amount of that obviously on operating the business. So current assets 764,000, and non-current assets about 4.2 million. Most of that is goodwill, with some fixed assets, giving total assets of 5 million. Looking at the liabilities, what do we see in the liabilities? First of all, from a liquidity point of view, if we are kind of comparing the current assets to the current liabilities, that's pretty significant. Now, within the current liabilities, the biggest number is this deferred consideration. So deferred consideration is money they've received in respect of sales, but they haven't yet earned. So they can't show it as a sale, but they will show it next year. Okay, so that's not really an amount owing back to anybody. It's a timing adjustment there, and it means that the sales are going to go, are going to be at least 4 million in 2021. So that's got to be quite a good thing. You'll notice the accounts payable is actually quite high. So that's probably a very high figure for a company, and just, are they, do they have enough cash to be able to pay their suppliers? They've only got 200,000 in the bank at the year end. And then here we can see this is where the debt is, and there's also some short-term loans payable. So these three numbers together is the debt, and that kind of explains why they are paying interest. Anyway, total liabilities are 8.3 million, which means that they've got a negative balance sheet. There we can see the negative balance sheet. The equity is negative, which means that their assets are less than their liabilities, and this means that if you put the company into liquidation, if you're a creditor, if you're owed money, you're not going to get, you're going to get part of you're not going to get paid in full. which gives rise to these loans here. You'll notice that they are convertible, and that means that they are convertible into equity. So the people who've lent the money have said, here is a loan, so I can, hopefully get my money out, but also I want the option of converting it into equity if you strike gold and everything goes very, very well. So kind of de-risking for the debt investor. So there's our balance sheet. Nothing really to sort of to observe apart from what we probably already knew, which was that there's quite a lot of these reserves, which is what the shareholders have invested. And here is the kind of the retained loss. So the company has been making losses. It's only just started trading, so I'd say ever since it started trading, it hasn't really been trading for very long. Movement in equity, therefore, it doesn't really tell us anything we don't already know. And then we come on to the cash flow, and we notice the cash flow. Yes, they are making this this loss, but they are, their cash is, they got negative cash flow, but it's only 1.7 million. So the main reason for that 1.7 million is that a lot of the compensation they're paying their staff is in the form of shares. Which is a cost to the business, but doesn't affect cash flow. And also there's that big write down of the investment that they made during the year. And that's effectively saying, that doesn't really affect cash. It's just an accounting adjustment. So there is their kind of their cash flow. They are, they are burning cash. You remember when we looked at the balance sheet, and we can see it down the bottom here, they've only got 200,000 in the bank at the end of the year. If you're burning at 1.7 million and you've only got 200,000, you're either going to have to hit profitability and hit positive cash flow pretty quickly, or you're going to have to go back and raise more money. And it would be my guess that these guys have raised money. So we can see the investing activities. Here's the investing activities, and this is effectively the acquisition of hemp net of the cash acquired. So it cost them £3 million, and obviously the detail of that is in note 9. And the way they've been funding is, well, they've been raising money through issuing shares and through the issue of these convertible debentures, which is effectively, the loans. And also they've been taking out loans. Here are the loans. So they've been issuing kind of normal loans, issuing convertible debentures, which is another form of loan, but it's just convertible into equity should the lenders require. And they have been issuing shares. And so they're issuing shares. They're also issuing shares to staff, a fairly significant amount, about £1 million as well, which means that there's, if you are a shareholder, you are being diluted on a pretty regular basis. So worth just looking at the auditors report, who do actually kind of highlight the fact that there is a material uncertainty relating to the going concern. So if you remember, this is kind of going concern means is the company trading, and can it continue to trade for the foreseeable future? And they say, just have a look at note 2 in the financial statements and make sure that you're happy, that you understand that. So it is illegal for a director to trade if they are no longer a going concern. However, whether you are a going concern is sometimes a little bit of a moot point, or a bit of a kind of grey area. So the note that the directors have come up with on going concern talks about how they are making a loss, they are burning cash, and it has need for financing. So they recognize the need for financing, and they are they're pretty confident that they will be able to go back and they will be able to raise additional funds as and when needed in order to continue the the operations of the business. So this is they're a loss-making company. They haven't got any money in the bank. They've got guess it's a pretty good brand, Love Hemp. They're looking to expand. It's a pretty exciting space to be in, but this certainly isn't for the faint-hearted. And you may find that you're throwing good money after bad, or you may find that actually this is a company which is going to kind of hit the right seams of gold, and it's going to start accelerating out and making lots and lots of money. So who knows? The windshield is usually a little less clearer than the rear view mirror. Anyway, here is their share price, and we see the share price. Well, you know, it's a pretty low. It has peaked. So if you bought in at the high of about 14.5p, you'd have been pretty much wiped out. Today it's trading around about 2.5 to 3p. Market capitalization, I think, is a much better identification of 24 million pounds. Don't forget, you know, if you buy this company, you're effectively buying negative net assets, so the net assets is worthless. So you know, there's no price to earnings ratio because there's no earnings, it's making a loss. So you know, you're really kind of just making a sort of a gut feel as to whether you think that this is an opportunity. So it's not an overly expensive business, but it's not a cheap business either. And the question is whether they you know, will continue to tap you for additional investment, and whether you're prepared to carry on, you know, to carry on funding this business. So there we have it. Love Hemp. I hope you found that analysis useful. There's not a huge amount to go on in terms of the financials because it's a pretty new company. So sounds pretty exciting. If you've got any ideas about what's going on in the business, deals that they've been signing, or you know, fundraising they've been involved with, or perhaps they've, you know, acquired more businesses, anything like that, then do drop it in the chat, share it with the other viewers. If you have a view, if this is a buy or a sell, then always interested in that. I hope you found that useful. Once again, don't forget to like, share and subscribe, and by all means recommend any companies which you would like me to have a look at, and I'll see you in the next video. Thanks a lot.